thanks so much. Yeah, yes, thanks for inviting our community to this webinar here. Of course, David, Jenny, and Sam, for having our community learn more about the tax incentives and what's available for them when they're hiring people and when they're doing research and development in Canada. So thank you very much for that, guys. I'll have to go now, but I leave you in good hands, Nima. And yeah, we'll be sharing this recording later with our community. And yeah, we can continue the conversation afterwards for sure.
Right.
Thank you so much, guys.
So before you leave, it's us that have to thank you, just to invite us with the aura and the credibility of global startups with your member. It just opens up such a great window of opportunity for us. So
Yeah.
muchas gracias.
Muchas gracias a ustedes. De nada. Nos vemos. Bye bye. Thanks, guys. Bye.
So welcome to everyone, and thanks for this, our partner, Global Startups, for the invitation for us to share our 25 years of experience on maximizing SR&ED tax credits while navigating its complexities. So for the fun of adding some interactivity and keeping you awake, we will publish a few polls in the chat of Teams. So if you want to participate and put your answers. So to do that, the best thing is probably, as in your view of Teams, just open up a panel to the right. So this way you can see the chat exchanges. Okay. So maybe Sam, can you read us the first poll?
Yeah, wow, Teams is so smart. As soon as you mentioned my name, it notified me that my mic was muted. Okay, so yeah, if you open up the chat panel and you scroll up a little bit, please hang on, my Teams is extremely slow. Okay, so our question is, who among you, which only one person right now, already knows about the SR&ED tax credits? And then you can click to just let us know your level of familiarity with the SR&ED tax credits.
So as you fill the poll, Sam, maybe you can then just share with us what the results. Yes. Okay. So
Nima has heard about SR&ED. Excellent.
Okay. So no, not more than that.
Well, wait, I assumed that was Nima, but maybe I'm wrong. Somebody heard about SR&ED tax credits. There we go.
Okay, excellent.
So now we have another person arriving, Ricardo. Maybe we can share the activity with him to participate in the poll.
Okay, so Ricardo, do you see the PowerPoint presentation now in my face?
Yes, I do.
Ricardo Marquez, nice to meet you.
Nice to meet you too.
So, saludo caluroso a toda la comunidad hispanohablante de Global Startup. Esta ha sido una breve oportunidad para mí de practicar un poco mi español y practico cada día con nuestro amigo aquí, David Gómez. Y ahora continúo con inglés. So I will spare you the struggle with another language. Okay, so this presentation is available upon request, but also it will be, the presentation in its entirety will be available in video on our website. So we can send you an email after the event, and then you can take a look on the website of the Emergex for this presentation. So the result, you can see, Ricardo, there are polls on the right of your, if you open up a panel to the right of your Teams, you can then see a few polls, and that'll be fun if you participate so we can know the kind of audience we have. So if I ask verbally, what is your experience with SR&ED?
It's new to me.
Good. So first, some words about this guy, the presenter. I'm the CEO of Emergex Shred Consultant. I have 2 slides about us, no more, because the focus here is on how we can share valuable information for you about the program and how you can improve if you were already a claimant. Now, knowing that we have more like beginners, I will adapt and choose the slides that are more relevant, and I will probably skip other slides that are much more advanced for people that are already claiming shred. So I founded Emergex in '94, so I'm going to celebrate in a month our 30th anniversary. So I say that I was still at the kindergarten when I started the company, so that's why. So I have a bachelor's degree in computer science and many certificates in languages and other technical abilities. 30 years of experience in the IT industry and certified project management professional from the international body called Project Management Institute. In the field of tax, I'm a member of the Fiscal and Financial Planning Association of Quebec, which indeed provides a lot of advice about taxes and tax credit. Emergex is a consulting firm specialized in claiming shred tax credits and other government programs. We have experienced professional, like a lot of, actually we have 4 PhDs in computer science, 1 in biomedical. And so our people know technology, the technology of your companies in such a way that they can extract what is the innovative part, what is the part that is leading edge, and just to present this information appropriately for the government program, because the government program doesn't ask you to describe your product. It doesn't ask you to describe your successes with the product. It's just more interested by the failures actually than the success. But I'll tell you a bit more about that in a few minutes. Now I say shred, but actually this is the test. If somebody tells you shred, you know they don't know about shred. And this is a kind of a test of knowledge. So if you want in a cocktail to say that you talk about shred, you might as well say, oh, yes, I know about shred. And people will say, oh, he knows how to pronounce it. So this is a good sign. So we are a team of 20 people, mostly technology advisors, because the program is truly technological in what you have to comply with. And there's a bit of financial information to collect. So in that sense, it is completely different from grants, which are often forms to fill out with administrative information and description of your project. So shred is a different animal. Our success rate is 98%, which means for every $1,000 that we claim, only 20 cents is cut by the Canada Revenue Agency. So we have more audits than 2%, but in these audits, we defend them well. So most of the time we keep the biggest chunk of the money claimed. But the audit is an instance, is a situation that happens every few years. And this is a test. It's testing the validity of your R&D and the compliance with the program, and it determines if you're allowed to continue to claim hundreds of thousands of dollars from this program or not. So the success rate is important to stay in the program and continue to give this big advantage to your company. In terms of fees, we're paid at a percentage. So if you don't get anything in terms of tax credits with our help, we're not paid. If you get $100,000, we have a percentage that's applied to that. And so actually it means we're both in together in the same boat to maximize the amount of R&D tax credits. We also do sometimes hourly revisions, but these are special cases upon request by the client, or in the case of audits by the Canada Revenue Agency. So what is the SHRED program? So the letters mean scientific research and experimental development. So we should pronounce SHRED, but somehow just it organically emerged as SHRED for everybody. It is a financial incentive to encourage R&D investment in Canada. From the perspective of economists, Canada has always been a conservative country in terms of R&D investment. We're far behind the US, Japan, Germany, most of the countries of Europe, and now even in a way behind China. And so the impetus of governments is how do we encourage R&D to be done in Canada, knowing that this is a high leverage activity. The country should not rely just on natural resources. It should rely on the brains of people because that's the future. Innovation and technology is the future. When you look at AI now and you look at the largest companies in the world, they are now all technology companies. So the federal government distributes $3 billion per year to 18,000 companies. So $3 billion is a big chunk of money. And this is the interest in this program. There's a lot of money. And some companies claim millions of dollars year and year and year after year. So that's the big difference against with grant. With a grant, you claim once, maybe you're not eligible for the next 3 years, maybe you're rejected, maybe the amount is reduced, maybe there's no budget, maybe your project, the government official doesn't like your project. But with SR&ED, there's a high level of certainty to get this a chunk or your part of this big amount of money. Now, there's estimatedly $2 billion also given by provinces on top of the $3 billion from the federal. Now, this number comes from ChatGPT, so I'm not sure I should rely on it because ChatGPT is pretty bad about the SR&ED program. Every time we ask questions, it doesn't provide reliable answers. So if you have questions, you better ask us. We'll be happy to provide free advice. But then provinces add to this program, even though it is administered by the federal. So Quebec, the government of Quebec will give $500 million more to 5,000 companies. While in the case of Ontario, we're talking about $400 million more, but to 9,000 companies. So you see who's most generous among the two. Most provinces have tax credits that they give for the SR&ED program in addition to what the federal gives us. Now, the program has been there for a long time. In its different form, it was there right after the Second World War. It has evolved. It's becoming more difficult. So more and more companies ask for experts to help them claim this program. So actually, between 2/3 and 80% of companies in Canada will ask a consultant or a SR&ED firm to claim their tax credits because it has a certain level of complexity. Now, the industry landscape of who's claiming SR&ED, 40% of all claims in Canada are for software development. So it truly is the most promising field. And I was looking at the profile of every company here. Most of you, at least 2/3 of you, of those that were registered, were in the field of software. So this is the field that the government likes. Other fields that you see in a much smaller share of the pie are electrical engineering, mechanical engineering, and medical sciences and devices. So I understand we may have 1 or 2 people here. Somebody is doing smartphone controlled insulin pump. So it's software and hardware. And somebody's doing cutting edge device for the relief of menstrual pain. So these are things that are also extremely well received by the R&D program. Now to give you an idea about who's claiming that. So it is not a program for the large companies. Actually, most claimants, 2/3, 64%, are companies with less than $4 million in revenues. And you don't even have to have sales to claim the program. So if you say, oh, I'm startup, I don't have sales, I don't have profits, so it's interesting, but later maybe I will be eligible. Well, you're eligible as soon as you spend on salaries and R&D. So the fact that you have sales or not does not matter. And the fact that you're profitable or not does not matter. You can still receive a check with 0 profits or losses and 0 revenues. So you can see the large companies represent a minority in number, but they represent a big chunk in dollars, because we have some of the largest companies that claim millions and millions of dollars in tax credits. So this is like, you could almost say that the large companies actually probably take something like a third or half of all the tax credits. So anyway, doesn't matter, because what matters is there are R&D tax credits for you. So what are the programs, the criteria to be eligible to the program? So you have to look at a project, specific project in your company. And that could be, if you develop a single software, well, the project is the development of your software platform. But in some cases, you may have the project can be divided in different projects, and you may have different projects that you do for clients that are paid, but you can also claim SR&ED even though you're paid by the client. So the 3 SR&ED criteria in image. So imagine a labyrinth, and this is not the labyrinth of bureaucracy. This is the labyrinth of the intellectual process of inventing something. You start on the left with the uncertainties. So when you have a problem, you first want to go with the obvious solution. If the solution is available in the form of open source code, you copy it, you install it, you run it, it works. It's amazing. You save a lot of time. Now, if it doesn't work for some reasons, you look on the web for the solution. You call a colleague who's a better expert than you maybe in that field, and you ask, do you know a solution to my problem? And if you don't get an answer, then this could be considered a technological wall, which is the uncertainty. That is the defining point of a SR&ED project. So when you have the uncertainty, you start entering the labyrinth, and what you want to do is, I want to reach the advancement, which is the conclusion of whether it is feasible or not to surmount the uncertainty. Because failure is also rewarded by the SR&ED program, because you don't always succeed when you do research. So let's start with crossing the first wall with your uncertainty. And you attempt to go, well, trying to go directly to your goal, and whoops, suddenly you end up with a dead end. It doesn't work. So technologically, it doesn't work. It's not stable. It's not fast enough to be usable. So you say, okay, I'm going to change that part of my prototype and do something different. So you start at a certain point here, and you kind of try a different direction, different software architecture, different type of method for just detecting magnetic fields, different things. And then you may encounter another obstacle. You encounter another dead end, which you don't achieve the result. You did not solve the uncertainty. Let's say you do a 3rd attempt, and then bingo, now you reach a conclusion. You succeed or you fail, because you could conclude that it is truly impossible with the experimental activities that we underwent. It was impossible truly to resolve the uncertainty, and therefore I conclude there is the advancement is negative. But that's fine, because all that money at least can be refunded by the government. So eligible activities. So these are activities more in the field of software, but the same thing applies with engineering, with chemical, with physical problem or physical properties. So let's give you an example, a series of examples in the case of software. You have the high-level activities of analysis, investigation, and even reverse engineering in the sense of looking at understanding at other products and other technologies. Then you have a technical design. You evaluate your concept at technological levels. You define the specs, and then you do software architecture, and you develop your own algorithm, and you program them, and you improve, and then you do a prototype. And a prototype is a super nice word for SR&ED because it means that if you thought you had to do a prototype, it means that you were not sure at all that you could achieve the objective. Otherwise, you would go straight to the result and work on the final solution. But you say, I'm not sure it's going to work. Let me try a partial attempt and we'll test. And then we see how we jump from that point further. So prototyping is a great case. Now, of course, Nima and Ricardo, if you have questions at any time, ask them interactively or by the chat, but you can do it verbally. I think we're kind of intimate enough that we can take questions. So far, was there any clarity, or is there any already I lost you all in the explanations?
If I just have a question about, you said that, okay, I love the fact that SR&ED will cover for failures, but how do we get started in, I guess, like what documentation do we need to provide or keep track of to be able to show that we are doing this?
Yes. So documentation will come later in the question. So
okay.
reserve, okay, stay suspended, stay in suspended animation for now, and
Okay.
we'll have that because it's indeed a very important question because as part of the scientific process, documentation is essential.
Right.
As to you, Ricardo, you understand you're a newcomer about SR&ED. So what do you follow up to now?
Yeah, it's all good. I just have one question though.
Yes.
If we spend, do we qualify only if we spend money within Canada, or if we hire consultants from around the globe, for example, we can still claim those?
So this is a good question. All your questions are good. You're so smart. So indeed, the government wants to encourage, while encouraging R&D development in Canada, at the same time, they were saying, well, let's also encourage job creation. Let's encourage higher salaries for the research people in Canada. And by the way, they will pay taxes in Canada if they have higher salaries and if we have more employment. So it is required to be a Canadian resident for tax purposes. You don't have to be the citizen, but somebody who pays taxes here then is eligible so I suppose probably having a work permit probably qualifies you right away that the salaries that is paid to you can be claimed. So this is for the salary of people. They have to be in Canada. They can travel a little bit, like 10% of the work they do outside of Canada can be done. Let's say you go to a scientific conference, or let's say you go to in your cases, you go back to your team in Chile or Colombia, and you have to have like software architecture sessions with the team. That could qualify as long as it's not more than 10% of the time. So travel occasionally is fine, but somebody could not really live there and be claimed as R&D. Subcontractors is the same thing. Subcontractors is delicate because people might say, well, the subcontractor is in Canada, but who says who's behind the subcontractor? Well, actually, the employees of the subcontractor also should be the one that work on the project should be in Canada. So let's say your firm is in Canada and you have some most of the employees actually are, let's say, based in Latin America, and some are based here in Canada. Then the work they do for a client, the work should be done by the Canadians.
Okay.
So we're talking about the type of activities. So you can see operational research, performance optimization, data collection. So we kind of go from stronger to weaker in terms of what is R&D, because data collection for analysis and testing. So data collection is a standard practice activity. It's not technological in itself, but because it is, in the case of an R&D project, it is an essential part of making the proof that you have R&D and that you're trying to achieve a technological advancement. Sometimes you have data. Like a good example is with AI. With AI, there's a lot of data. We say like 80 to 90% of the work is about cleaning the data. So data collection and cleaning will be eligible, although it's not even done by a programmer or an engineer, but it's the meat and the fat that goes around the skeleton. If you say the skeleton is the R&D, there are support activities that can be claimed as well. If we go down, testing, same thing. So part of the testing, some testing will be, user functionalities that would not be eligible, but some functionalities, some testing might allow you to discover a weakness in the algorithm and then force you back to the software architecture and re-engineering and so on. So that becomes R&D then. Things that are not eligible. So in general, standard practice. So what is known, what is taught in school, what you can find on the web, is standard practice. Might be work, but there's no innovation there. You just do what is available. Now, the note here is standard practice could still be claimed if it is part of a broader R&D project. But in itself, in principle, no. And the definition of standard practice is techniques already known in the industry. If I can move cannot move my mouse on that screen. So what is available on public domain? Other things is training and education, and this is misleading, but because people say, "Hey, I learned about Python in the context of AI, so that was tough. That was a high-end education, so it must be eligible to shred." And the answer is no, because you were not an expert yet. After you've done the training, now you could say you are a somewhat expert, and then you can innovate at the scale of your company, your country, or the world. And so you basically have to have the technical abilities that is available in the industry. You have to reach that point before you can say, now I innovate. So you cannot, we had a case of a client, he was a musician by training, and he had learned about programming, and then he was doing R&D. He thought he was doing R&D. It was tough for him, but any programmer could do what he did. So in that sense, he was not educated enough or competent enough to claim to do R&D. Other things that are not eligible, you can imagine things that have to do with the look of the product or ergonomics, front-end design, interfaces, things that are quality control, just to test that the product is fast enough, the product answers the whole collection of input and outputs that you expect, and so on. And anything about market research and marketing and sales is just by the name is not technological in nature. So a good example of what is standard practice is, let's say somebody working in the blockchain says, well, this is cryptography. I go and I found algorithms about massively complex and advanced theories of cryptography to encode our blockchain. Yes, that's complex, but you did not invent it. Regardless of its complexity, it was available directly on the web. And on the other hand, you can have somebody who says, hey, I work on an accounting software and I want to create an API to a database, and the API that's supposed to work does not, even though it's documented the way I used it. So you may have to surmount this obstacle. So we're talking about lower tech in the field that is fairly well established. Databases and accounting software have been there for a long time, but the API itself might actually be an obstacle that deserves R&D. So how much can we claim? Usually when I give the presentation to CFOs, I say, this is what you didn't care about everything I said up to now, but now you care because we're talking about money. But for everybody, the answer is often surprising. So these are the numbers for Ontario and the number for Quebec or higher. So what you can see on the left are the rates. So for every dollar of eligible expense, how much money do you get back in R&D tax credits? This is the column on the left for Canadian controlled private corporations, CCPC. You could say they are small companies, more than large ones, so they have a higher rate. If you go to the right, we're talking about companies that are public companies, or so quoted on the stock market, or foreign companies. So that may be the case for some of your companies. If you establish a company, if your company in the Philippines or in Latin America. By the way, Ricardo, I'm not sure which country you come from and where is your company based. Did you tell me which country?
I am from Brazil, but the company was founded here in Canada.
Okay, so in that case, if you had a mother company in Brazil, the rates, because it's a foreign company, then the rate would be lower. In your case, if the company is created here, then the question is the shareholders. If the shareholders are 50% Canadians, you're good. You follow the column to the left. But if the Brazilian mother company happens to own more than 50%, then you fall on the right side, which is almost half the rate. So that again explains the focus of interest of the Canadian government, which is to encourage local companies, and because you assume that local companies will keep the R&D and the salaries here. So you can see that 2/3 of the salary can be refunded. So this is a huge number. In Quebec, it goes up to 74%. And when people learn about the number, they're surprised because they expected like 20, 30% in terms of R&D tax credit, but it's a big chunk. And that's what makes the program very interesting. Now, the next line is about subcontractors. Subcontractors are not as advantageous as employees. But still, you get like 1/3 of the fees you get from subcontractors. And that is the case of if you're a small company, a foreign company or public company, that will be almost half, like 20%. And then in the case of the cost of materials consumed, so some of you in the field of manufacturing may have to do different boxes to keep the product. You may have to try different types of electronics, circuits, and all the produce and that is thrown away would count as materials consumed, and you can get 42% out of this material. These are the rates for Ontario. The rates of Quebec are a bit higher. So this is the combined federal program plus the provincial program, because I didn't want to make it. If you look on the web, you will see, hey, the Canadian SR&ED program gives you 35% tax credits. Yeah. And they stop it there. So they're bad marketers. I prefer to say, well, I mean, I don't care where the money comes from. I want to know how much money can I get. And the answer is you can get it from both. You don't care about the split. The end result is 66% of the eligible expenses would be refunded by the government. And when I say refunded, it means that even though the company does not pay taxes, it will receive a check. So this is extremely interesting for startups.
Pierre?
Yes.
Yes. Hi, I have a question. So, would you know the rates for BC? Because
Maybe
our
we,
company's
yeah,
in Vancouver.
yeah. Good question. Maybe Jenny can do a little research on the side and come back with a number.
Oh, okay. Thank you.
My guess it is quite similar to Ontario, a bit less
Yeah,
maybe.
it's around 65%, roughly.
65, good. So it's quite
Oh,
similar.
okay.
Yep.
Okay.
Yeah, indeed.
Okay.
Because you know, with the federal alone, you get 54% as a basis. So for provinces that do not have any tax credit, you will get still 54%. So there I'm going into a bit more of the details. So I will skip some sections like this one.
Sorry,
because,
I
yes.
think Ricardo has also a question.
Yeah. So Pierre,
Yes.
you mentioned that contractors outside of Canada won't be claimable. So my company is a Canadian company, but I'm doing R&D sourcing from contractors in Brazil. That money spent in Brazil is not eligible, right?
Yes.
Okay.
Now now in your case, you're in Canada, and your role, I see you're the CEO of the company. Do you happen to have a technical profile?
Yeah, I do.
Okay. So do you somehow have a hands-on, we say la main à la pâte in French, so you have hands-on role in the technological decisions and the software architecture and the product design? Do you have this active role with your team?
Yes, I did. I created the MVP. I created the prototypes. I actually created the architecture, the current final architecture. So yeah.
So in that case, you would be eligible then. So that part of you could be claimed, and then that could, as soon as you start receiving tax credits, maybe that will encourage you to hire a few more people around here, just to have the ability to claim more tax credits. I mean, of course, the whole question is, is it cheaper to work with developers in Brazil? Or is it cheaper to work with Canadian developers that are subsidized? So you have to look at the balance and make this real life business decision. Now, what I find is, for example, people say, well, I want to develop in India, so it's going to be so cheap. It's going to be 1/3, 1/4 of what it is in Canada for a programmer. So it's going to be cheaper. I don't need the R&D program. I don't care. But then they have other issues. The issues is, what is the business culture of the country? What is the technological prowess? What is the mindset and the efficiency? And as a small parenthesis, several companies who used India were kind of disappointed because they basically they do what they're being asked, but they don't question the decisions. While if you do that with a Canadian and probably a Latin American as well, if you say, I'd like you to develop this using that software and that architecture, your developer, a competent developer, will tell you, wait a minute, this is not the most efficient way. Can I suggest a better way? And then, so you end up having a better result and a better quality developer. So so you have to take that into account. But you may have other needs, like if you want a programmer or a technological person to be close to the market. Let's say you have a market in Canada for your products. Maybe you want a programmer to be able to go on site with the client and understand the client and work at their solution, and so on. So it's an evaluation that has to be made on a case-by-case basis.
Mhm.
So that screen is way too advanced, I would say, for non-claimants. Let me just give you a hint, though, that paying salary is the best way to get higher tax credits. The worst is to pay you by dividends. You get 0 tax credits. And the bonus, even the bonus you pay to employees, has a different treatment. It pays less or not at all compared with the base salary. So what I would say is, when you have employees in that situation, just call us and we'll be happy to give you some free advice on that. Now, an important question is about subcontractors. And indeed, because most of you have a base in another country and a subsidiary in Canada, the whole question of subcontracting, so it's not sous-traitance, it is subcontracting, is important. So imagine that you are, this is a babushka, it's a Russian doll. So let's say the third doll from the right is you. Not the biggest one, but the second one. So if I can bring my cursor, that would be even better. Just a point. Let me see if I can do that. Do you see a cursor? Yeah, you see my cursor. So let's say you are that babushka, and you do software development. Well, you happen to have a big client. That's the big client who's actually asking you to do software development for your purpose. But you also yourself have a smaller firm that maybe you hire for some specific parts of the project because you need some additional expertise. In the case of one of the attendees' companies about biomedical devices, well, you may do the software development, but maybe the manufacturing of the plastic is not something you can do, so you'll ask a subcontractor to do it. And that subcontractor in itself can also have other people, like a individual consultant being subcontractor. So in all that chain, you can claim R&D for every single company in the chain. No, you can't. That's dreaming. So you cannot double dip or triple dip or quadruple dip. So the R&D is going to be claimed at only one place. And that depends on some criteria. And I'll give you a hint about them because time is flying. It depends who's the payer and who's the performer. So the criteria to consider are who has the control over the experimental development, who owns the intellectual property, but it is not an absolute. It is not absolutely it's just one element to consider. Then who's taking the technological risk? You or the subcontractor or the client? And who's taking the financial risk? Is the project a contract to do R&D? Or are you asked to deliver a black box, a custom product? All these things will be taken into account to determine that, the balance weighs in the favor of the performer here. So the one is doing the development. Well, the developer controls the experimental development. And let's say he gave and sold the intellectual property to the bigger client. And the bigger client is taking a risk because if there's extra development, the contract specifies that the client will have to pay extra. So these are the elements that are taken into the account to know. So you cannot assume, and that's a very common mistake, you cannot assume that the payer is the one who takes it all. So the big clients wants to take the intellectual property, all the rights, the R&D tax credits. They want to control you. They want to dominate you, but they don't have the right to do that because they're not even in best position legally to claim R&D. So we can negotiate this contract differently, and this is part of the, the advice we also give. So these are details about how invoices should be created, just to make sure that you're going to have the proper entity claim the R&D and avoid another entity to claim it at the same time, because we see that sometimes two companies, they don't talk to each other. One is giving a contract to the other. Both are doing R&D. They don't talk to each other. They both claim, and then poof, Revenue Canada knows and detects that this R&D was claimed twice, and then they will be audited. So I'm skipping about the details because this is way too advanced at this point. But whenever you have subcontractors, we have plenty of advice to give. And then again, we see that employees, and we give explanations about what is an employee, what is a subcontractor. There's certain rules to follow, but I will skip that as well. What you have to know, though, is at the bottom, non-arm's length subcontractors. So that means that one company controls the other. And this is what happens when you have a Canadian company and you have a mother company in another country. Well, it's not two companies dealing at a market value. You don't, there's no competition. And therefore, there's a risk that there is overpricing and underpricing between the two companies because they arrange between themselves. And that is something that the government wants to avoid. And therefore, there's some rules. So if the mother company gives a contract to the Canadian company, this is an issue to watch out. And same thing here in Canada, if you have another subsidiary in Canada that you want to give a contract to, or maybe in Canada you want to give a research contract to your mother company in Latin America or the Philippines, then you have to watch out for that. The federal tax credits are the rules are different for small companies and larger companies, or small companies and companies that are public or that have foreign entities. So without entering into too much details, as a small company, you receive the tax credits as a check if you don't have any taxes to pay. But first, the taxes will be reduced to zero. So if you happen to have a profitable business in Canada, and you pay taxes, it's fine. Taxes will be reduced to zero first before they send you a check for the balance. So it still is money. You don't have to shell out from your pockets. Documentation. Somebody had questions about documentation, right? Right. So there it is.
Yep, that's me. Thanks.
So that is an extract of the form, the tax form called T661. And what you can see here, if we look at it, the question is, and this is blue, so you can see this is the form where you fill out like pages and pages and pages. This is a section specific to R&D tax credit. It's an annex called T661. So it says, what evidence do you have to support your claim? Check any that applies. You do not need to submit these items with the claim, but they're required to retain in the case of a review or an audit. So the fact that there is a specific list to check tells you that this is not, have some documentation somewhere, and regardless of the format, the details, the level of the frequency, how spread out it is filled out by people, doesn't matter. No, actually, all this matters. So that tells you this is a real thing. So you have to specify. In this example, we said, well, we had the design of experiment. We kept records of the trials. So as we did trials, we took note. This trial with that version of the prototype gave us that speed, that output. That other version gave us that speed and that output. So we have these trials. As we progress with the experiments, we can see how much we're getting closer to resolving the uncertainty. It could be simple things like at the end, number 278, we talk about photographs and videos. Imagine you have on the board with your team, you draw, design, you make boxes, diagrams, and lines. And this is a good example still. It's a truly organic way to say, I did R&D because we discussed the architecture with our team. So documentation for small companies, starting companies, there's a lot of freedom, but as the company receives tax credits and spends more time year after year with the program, the company has to become more organized and a bit more documented. You have to think about it like it's like a scientific lab, which is, you would say, the extreme sophistication of R&D, where you want to document your hypotheses in a logbook, and you want to document the experiment, and then as you run every experiment, you document the numbers, and then you do statistics and linear regressions and reports. So imagine that you want to aim towards this scientific process. Even using the words like hypothesis when you do a software experiment. Although programmers will never use that word. They do prototypes, trials, steps, sprints. But in the way we describe your R&D, we use these words because they get closer to what is the scientific method, which is what is financed by the program. Timesheets, old style. So then again, details and advice that I will skip. But timesheets become more necessary as time passes. You may be okay the first time. Let's say you have a team of 1, 2, 3, 4 developers. You can get away with it. And we have other ways to document the activities. But with time, you better think about implementing a timesheet system that allows you to track the activities. And I give a certain level of details here where I say, well, in the timesheets, you should be able to see, the name of the developer, the date, the specific hours of the work, the specific work, but also the internal project name. Your internal project name will be different than the R&D project that we claim, because what you do something naturally in the process in the course of the year. But when we take a look at what was done, we'll kind of abstract it from a higher level. So we will identify technological axes and say, well, these 3 internal projects, we're trying to resolve the same uncertainty. Therefore, we're going to group that in one project. And in the other way, you had one big platform that had 3 different issues. So we'll document 3 projects, even though it's a single software platform. This is an example of timesheets with a certain level of where we see we have activity, technical activity, for which there was a series of tasks, time. Then you could also optionally say, was there any challenge or uncertainty? And then there's more details. But the key thing is here, by having a certain level of grouping for the activities and the tasks, then we can use that to sort out eligible activities. Like data synchronization may be good, but record decomposition may not. So we'll select one and not the other from the timesheets. And then in the activities, we might say, okay, prototyping is good. but quality assurance is not, so we would subtract at that time. So this is the interest of having a 2-level or 3-level documentation of the time for the developers. Now, I know all the software developers, they hate documenting their timesheets, but this is when it might be useful to actually invite us to sensitize them about why it's good to have documentation. It's because their salaries will be paid because of this R&D tax credit. Grants. People want free money. I don't know why. So supposedly there's 3,000, even 5,000 grants in Canada from all the provinces, cities, and country. But they're not that easy to get for many reasons. But you have 5 main categories of projects and investments that the government wants to finance. And the first one, like R&D, is about innovation. So multiple program will help you about innovation. And in the field of AI, for example, now there's several programs at every level that duplicate each other and step on each other's foot, but that's a good thing. So you can select the programs for which there's a budget and for which your program fits the best. Another great field where there's plenty of grants is job creation. So it used to be the objective of all governments, create jobs for more voters. For more citizens. But they're voters, so you want to just give them jobs so they vote for you. But today now it's becoming somehow the opposite. In some grants, they will give you money to automate activities, robotize activities, and streamline your activities. So it's exactly the opposite of job creation. But it's because they finally recognized that there was a shortage of just technically qualified resources. And therefore, what do you do? Well, instead of creating more jobs, maybe you should actually make sure that the jobs that are not fulfilled, or the jobs that are not that are missing in the industry, are replaced by some other solution, so that the economy still works. Immobilization, so building a manufacturing, buying machinery, modernizing a manufacturing plant. These are very expensive ventures, and government provides some help for that too. Export is another field. It's good for the economy. You bring sales from the international market, so it's a good thing. So this is something that they will also subsidize. And digital transformation is the new kid in the block. After the pandemic, or during the pandemic, it seemed to be the big buzzword. How do we transform companies, especially traditional businesses, so that they're more efficient thanks to digitalization of their processes? So if you have projects that are potentially fine, so talk to us about your investment projects is the conclusion here at the bottom. Now, grants, I would skip. We have like a few grants that are, I would say, the most obvious ones, the low-hanging fruits, the ones for which there's budgets, for which this is feasible to get the grant. So these are all different grants that we've done in the past. Some warnings: do not apply to grants or subsidies before consulting your R&D tax credit professional, because there is the issue that government assistance can reduce the R&D tax credit. And a very popular program is called IRAP. It's the Industrial Research Assistance Program. On our website, I think we receive more requests. We used to receive more requests for IRAP than even for SR&ED. So that tells you it's a massively popular program. But that, if you claim it, well, it's going to cannibalize your R&D tax credit. So we have to take that into account to optimize and think, well, is it worth doing IRAP or not? It's promising. The government official wants to push the program to you, but then does it make sense to you? So this is another question we can answer. But some optimizations can be done between programs, tax credits, and grants. So our service offer, and that will complete our presentation, is we...
Just real quick, I am currently
yes,
publishing
poll
another
results
poll in the chat. So if you want to take a second to navigate over to the chat and check out the poll.
Can you share the result of the previous chats, Sam, while you're there?
I believe there were only 2 answers. Somebody who was somewhat familiar
Okay.
and somebody who had no idea what SR&ED was.
So let's say I participate to the poll. What do you think about the SR&ED program? So we have pain in the ass, 2 need help, 3 need help. Okay, good. Okay, so so we have an A to Z approach where we start with planning and strategy and advice, and that includes even the corporation. The structure of the company and who are the shareholders is especially important for companies like yours that have a parent company in another country. So I would say take a look at that. And one interesting thing that could happen is if you have the control over the Canadian entity, even though the foreign corporation owns a minority, then you indeed can benefit from the maximum amount of tax credit. So this is something in the terms of structure we can help you. And then when it's time to, we do a diagnostic at any time. If you want to know if you're eligible and how much, we can do that. There's no, we're happy to do that without any fee. And then if we work with a company, we do technical interviews with the technical people, the leads in your companies, and then we describe the innovation according to the guidelines of the program. We also collect the expenses and identify which are eligible and not. And there's a lot of gray zones where somebody without experience might not know, can I go that far? Can I claim that person? Can I claim that percentage? This is where we have the experience and we can help you maximize it while managing the risks of audit by the government. We do training and coaching. Yesterday, we spent 3.5 hours with a group of 8 clients just to educate them about the tricks of the trade so that they can understand when there's R&D in while they do their development projects, so they could distinguish when there's potential R&D. They can they can document it. They can so by spot checks, we can check in during the course of the year to see what projects are continuing, what new projects are happening, and so on. So so the seminar, like yesterday, is a way to optimize by knowledge, sharing the knowledge. Of course, knowledge is power, knowledge is money. And then in the case of an audit, we're there. So we help and we prepare your technical team so that they can face the government officials and win. We can even do more than that, because we have auditors this year are much more demanding than the year before. So somehow they are like pushing for more audits than before. So this is like a twist, a recent twist in the program, in the philosophy of the program. And then we have some cases where we have to go and sue the government. So we do that with a partner so that And that's extremely successful because the company, like you, would not pay any fee. You just pay a percentage of the tax credits to defend yourself in court. And we had a case where a client was completely denied its R&D tax credit claim. We went to court with him, and he won 99% of what he claimed. So he won $200,000 in tax credits. But more importantly, his work was recognized eligible, and then for every year afterwards, he'll be able to claim 200, 250, 300, and more for the next few years. So he's back into the program, although he was kicked out by a full refusal. So fighting it is hard. We know how to do it. We can help you, and we have partners to do that as far as going to courts. But often, even without going to courts, just the threat of going to court makes them change course and say, okay, fine. We got you to 0, but now that you gave us some complimentary information and you threatened us of a lawsuit, well, we accept everything. So that's another way that works exceedingly well. So some of the values that we provide, we review and optimize your contracts with subcontractors and universities. Universities also can take part of your R&D, and even though you pay them, there's a different rate that applies to them. We help with you with strategies about the cash flow. So if you're short of cash, we have ways that you could recycle the money. Recycle in the legal term, in the legal way, of course. Bonuses, we mentioned, are treated differently. Also, how shareholders are paid, and all this we can help in terms of groundwork optimization. We can optimize the combination with other grants, and we can validate many subjects that could impact your R&D. And that's the beauty of the way we're paid. We're paid on a percentage of the tax credit we get. So we have to work together hand in hand so that we maximize your claim, because we're going to be paid more and you're going to receive a lot more as well. We can help you pre-finance your tax credits. And we also have a bunch of partners that we can share. We're happy to put them in contact with them. And that might be especially relevant for those of you who come here. You may not have been in Canada for 30 years. So we don't know. I mean, who should I go to for, patent lawyer? And can I get a better accountant? Pre-financing, I can do that now. So you can ask us and we can help you with these resources. And our business model is we're paid on a percentage of the actual tax credits. And so that gives us a long-term vision to maximize your tax credits. The rest of the terms I will not go through, but they're there as a reference in the PowerPoint and then in the video. And that concludes this presentation for you to answer any question. And then I should be able to see my face in the next page. Yes, again.
I've also just added a new poll to the chat just for you to give us some feedback on the presentation if you want to navigate over to that.
So 2 changed my life. Good. But of course, there's my vote in there. Excellent. So you'd like to know more. Do I understand that Nima and Ricardo would like to know more?
Definitely.
You both clicked? Good. Excellent.
Yes.
So I guess David and Jenny will be there with you. Any other question about the program? How to structure a company to claim more money?
I just want to get the team to meet with you already.
That's good.
I
Excellent.
have a question that I think could be an important content for the recording, and it's regarding the pre-financing opportunities that a company could have for this kind of tax credits? How is it, or?
Okay. Well, before we go there, we have to know that when the tax credits are claimed, it is after the financial year end, because the numbers and the description will be included in the tax return. So we call it a tax credit for that reason. While a grant, you can ask a grant anytime in your life, and it has its own delays, its own deadlines. And in the case of R&D tax credits, you prepare it, you include it in your tax return, and then you wait a few months for an answer or an audit. Now, because this delay can be long, for the companies that need some cash, faster cash to operate, then we have partners that can lend you the money earlier. So as soon as you have some R&D, and we can confirm it to some companies, they will actually can lend you money, like maybe after 6 months or 9 months of doing R&D, they can advance money. When you file the tax credit, they can advance a bit more. And then when you receive your tax credits months after, they will pay themselves with the refund. And you have the remainder of the money will be paid to you. So this is a nice way in terms of cash flow, especially in the early years where you struggle to find money, when VC money, venture capital money, would be very expensive, meaning it's going to take an arm, it's going to cut your arm, and you have to give away your arm, 20% or 30% of the company. So pre-financing is just a loan. And so it's great, it doesn't take any shares of the company, but also the loan is possible because the bank will never lend you money. They will say, how much assets do you have to give me as collateral for my loan? How many cars, vehicles, trucks do you have? How many machinery? How many manufacturing plants do you have? Oh, you're a software company. You have nothing, no assets, just computers and code. As a bank, I will not lend you anything. But because your assets of R&D tax credits are valuable to some private lenders, they will lend you on that basis. Does that help you, David, to start your company?
Yes, this is a good opportunity. This is what I taught to people when we approach to the SR&ED on the tax credits, that I found that it's not common that everybody knows about this possibility and the advantage to implement the technology or innovation research to finance their projects. So it's a really good opportunity.
Excellent. Any other question around here? Good.
No,
So I guess we'll
questions.
end it here. So you have to you should cut off first your presentation. I should be the last one to cut it off. Thank you.
Yes.
Thank you. Bye.
Thanks, Global Startups. Bye bye.